it's a good catch. Is this a cup and handle? And then I would argue that for any bottoming formation, you always look for the confirmation, and the confirmation is through the neckline. And the neckline is the line that runs throughout the entirety of the pattern. So at some point, you want to see this thing crack this and confirm. And this is where the markets trap you in, because it does look like a cup and handle. It does look like a double bottom, but you can see how it walks you right up to the line and falls short. Did not come to this neckline. So this is how the traps occur in the market. And this is where I kind of pride that I have the capability to not only identify monster moves, but also understand the traps, because I fell into them too many times myself. At some point, hopefully you learn your lessons. So you can see we creeped up here, fell short. And, it's, this little difference that's could be all the difference in the world. So to me, if this thing starts turning above, 115 again, that's a breach of that neckline. Now we got higher highs and higher lows, and this would suggest a bottoming. But for right now, it feels like you're walking into a trap. Any other questions? So let me kind of turn to just the dollar. And this is where correlations don't necessarily work, where the dollar is going stronger, but so is gold. Typically, they tend to go in opposite directions. Let's kind of the mirror opposite at this point. So I've got the euro versus the US dollar, and gold versus the dollar. And the euro is in a downtrend. And this is kind of the opposite of FCX, where to me, the euro is also in this diamond pattern. You don't see these too often, so it's kind of cool. We have two examples here of a very kind of esoteric pattern. So again, unlike, remember FCX leading into the pattern, well, you could also argue that leading into this pattern was an uptrend. So whichever way this goes, this would be a continuation of that uptrend, but in this case, it looks like a reversal. It actually looks like a continuation of the big secular trend, the long-term trend. So now we're sitting at this baseline support area of this diamond pattern. Now, we could still continue to do some work in here before it succumbs, but it looks like this thing is ready to crack, and I'm surmising that we're going to get a move lower back to parity on the euro. So it just feels like the dollar is still going to go stronger, and yet gold is also going stronger. Typically, those two don't occur in tandem. So you can see that gold broke out of this long-term basing inverted head and shoulders pattern. Broke out, and if you measure the bottom of the inverted head and shoulders to the neckline from 1600 to 2100, that's $500. And so I think you can add a measurement of $500 to the breakout area, and you get to $2,600. And we're $2,250. So that's where it appears gold is going to go. $2,600. And if it goes there, probably could double from there. So, I think the Fed is probably going to let the genie out of the bottle, and we could be headed to hyperinflation. And history repeats. This is what happened in the 70s. In the 60s, because of the Vietnam War, we started seeing, government spending, inflation. Early 70s, got inflation. Central bank came in like it did, raised rates. Inflation looked like it was coming back down. Fed took their, foot off the pedal, lowered rates again, inflation came back. Fed went back to work, raised rates, looked like it was coming back down. They took their foot off the pedal. And, they didn't, do a firm enough job. And eventually the genie got let out of the bottle. And by the late 70s, we were in hyperinflation. It was the first time gold went from $200 to $1,000. Silver went to $50. We had oil crises, the Afghanistan war, and all the kind of things that we're getting exactly today. So it is just amazing how these cycles repeat. We're at the 50-year mark, and there's something called a Kondratiev wave. Kondratiev was an Austrian economist, and he kind of saw that things happened in 50 and 100-year cycles. So you study the 70s, culturally, economically, turbulence. It's just amazing, the overlap. And if history's a guide, we're going to go much higher on inflation. So there you go. So I kind of think that, again, people are going to conflate Bitcoin and gold. I think that's going to be a mistake. Again, everything is sentiment and environment, and certainly they could keep going in tandem. But, there's nothing under Bitcoin. Look, at the end of the day, value is what we agree things to be. So even gold, people could say, well, why is gold? Well, gold is a commodity. Gold has properties that are very valuable in industry and manufacture. It has uses. Bitcoin is basically what we say it is. There is no dividends, there's no income, there's no value other than what we say it is. Does it have a utility? Yes. I go back and forth with my wife for 5 years arguing this. It's a ledger. Has all these things that you can use it for, but there's no way to value it other than what somebody's willing to take it off your hands for. And at some point, to me, that's a greater fool theory, and somebody's going to get left holding the bag. But in the meantime, I'll trade it up, down, and sideways. Duncan says Bitcoin is limited. That's why it has its value. Well, I could just say, this glass, let's just make 21 million of these and start selling these for $500. The scarcity argument, I don't know. There's 23,000 coins out there now. So bit by bit, they're undermining the whole value of that asset class. It's supposed to be something that away from government control. Meantime, the SEC's now issued all these regulations, and these ETFs, that are very regulated are now dominating the crypto market. So to me, look, I never try and get into reasons why something's going up or going down, or what something is. I'll bet on 2 flies going up a wall if there's a daily chart, a high-low close, and I can identify the risk of that trade. So I don't want to get into a kind of intellectual argument and piss off a lot of people, because I have no idea what I'm talking about. Why have ETFs been made? Because Wall Street has a history of being whores. They will make anything that will make them money. Look at the CDOs of 2008. those were just piles of shit that were just reconstituted into bigger piles of shit and sold and distributed to Ireland and Iceland and countries all over the world because Wall Street figured out they could make some money from them. So I've been to this dance before. So I think the dollar looks like it's stronger. It looks like gold's going stronger. I like pound New Zealand. Been long this for the last couple of weeks. And it just looks like it's now, quietly, and I like that. It's not going berserk, but it is quietly just going north. So I started identifying pound New Zealand around 207.5. It's now 211.5. Quietly made 400 pips, and I think this is just the beginning. So here we again have this inverted head and shoulders, and this confirmed it. So just unlike those other patterns with Moderna, with the double bottom and the cup and handle, we had confirmation in pound New Zealand by it going through the neckline some weeks ago. It's 210. So it now went, from a continuum of lower highs, and now we have higher lows and higher highs. And I really can't see this thing stopping until we hit 216 again. So there's still 500 bad boys left on the table. So to me, this is the pair. Buy it, hold it, don't watch it, trust it. Duncan says, I took another long on pound New Zealand. Just take a long, go to sleep and leave it. I think I've been waiting for this move for years. But it looks like this is finally going to unfold. I think we're going to take out the monthly resistance at some point. So this is the monthly chart of pound New Zealand, where each bar represents 1 month in time, which is very different than a 5-minute chart. So you can see, on the monthly chart, there's still much more left to go. I mean, I'd say the primary resistance here is, we can conjoin 2 other lows, and you can see we're pretty close to breaking out of this secondary resistance line. Now, you could say this is a double top. This is a resistance area. It is. It just feels like this thing is going to keep working its way north. And right when I started the pattern trader, I started, extolling the virtues of being long based on this very subtle double bottom, inverted head and shoulders, all the way back in 2016 and 17. And, you could also say that that was a bear trap where you snuck underneath these lows, and you haven't seen them since. Every time, that old resistance became new support. So 180 was old resistance, and every time it found support there. So it's been bouncing off this thing, and now it looks like it's ready to test. And I think you could go somewhat parabolic in this thing at some point in the not too distant future. So I would encourage you to buy something of this currency pair. Exotic, it goes berserk, but I think you want to be there. So Brian, depending on where you are, TradeView is a good one, Forex.com in the United States, XM Global is another one. So just do your homework. I don't recommend brokers. I don't endorse brokers. They don't endorse me. So just be clear on your due diligence when you select one. So just to wrap up, I think that, the indexes look like they are in a trading range. With the exception of perhaps IWM, which looks like it could be breaking out. So I would look at this one on pullbacks. IWM looks like it's breaking out of a rectangle bottom and bear trap and an inverted head and shoulders. It's got a lot of different virtues, and it looks like it also is confirming. So again, the question a few minutes ago was, when we see a pattern, what's the difference when we see a pattern and it goes, and when we see a pattern and it doesn't go? The answer is the pattern has to confirm itself. So what I mean here is that you can see that there are a number of different patterns that are going on here. So we have this rectangle, which appears to be a bottom and is breaking out to the upside. We also have this bear trap, if you will, where it snuck under here. And anybody who chased this low now is really, sucking wind as it's breaking out the upside. So you have that bear trap, you have a little inverted head and shoulders here, you have the rectangle bottom, and you have the benefit of everything being confirmed by it breaking out. And again, you can see this is what price do. They break out, and the first soldiers always get sacrificed, meaning that the first breakout, everybody gets excited, and then you get this huge pullback. And then you had the double bottom, and now you had the breakout. And you actually had a breakout again, and then another pullback. And then it tested exactly the breakout area, and now it's made a new high. So this tells you that it's basically real, and this thing looks like it's on its way. And you could get a massive rally in the small caps. So you're at this first major hurdle here, where you're at the first line of resistance, and you're basically there about to take that out. And now you are looking at the next line, which is around almost 230. And I do think that there is a very good chance you're going to see a meaningful move like that. So IWM, buy the calls. They're not too expensive into sell-offs. You're welcome, Sean, as always. Thanks, Duncan. So I'll defer to you, but that's basically my thoughts. Indexes, S&P, NASDAQ, trading range. IWM, likely to keep going north, break that in, buy that into dips. Bitcoin, if you've, I would try and actually sell rallies at this point. Bonds look like TLT we didn't talk about. I loved, trading TLT. I was on the long side last week. I was looking for this 95 area. We kind of found it. And now it's a question of where we go. And this thing still looks like it wants to go lower, which means rates go higher, which means it just, again, confirms this, higher inflation thesis. So TLT has been trading in this range. You can see that last week we again got to the top, and we're backing off, here. I would like to see, some kind of reattempt here. And then I would look to short this again. And I just do feel that, we're headed back lower again in TLT, which means rates are going higher, which means gold's going higher, which means dollars going higher, which means that S&P should stall at this point. And but try not to get too ahead of them. Try not to do these scenario analysis. I just look at patterns, risk and reward, This looks like a resistance. I'm kind of gonna wait to see this thing kind of consolidate the resistance and look to get short in the form of buying puts in TLT. So pound New Zealand on the long side, the euro on the short side, gold on the long side. So those are kind of my wrap up. I'm going to try and maybe short some Coinbase today into a rally. Maybe short some Moderna, the stock, into a rally. In fact, maybe I'll put some. I'm just going to enter an order in Moderna right now. I always like to have orders contingent, have a plan before the market starts. And sometimes, in the opening flurry, you see prices and you never see them again. So somebody's got their here. Here we go. Sell short. At a limit of, let's just do 107.85. Pretty arbitrary. And I'll keep shorting it up until 112, and then use Friday's high as a Thursday's high. That was 112.5 or something as a risk area. So I'm going to just start probing the market by selling short the stock of Moderna. This is mRNA. I'm going to sell short. It's just terminology in the stock market. In FX, if you want to just sell something, you sell it. In stocks, you actually have to borrow that stock from the broker to sell it. These are mechanics that your broker does. Don't worry about it. You just put an order to sell short. And I'm going to put a limit a little bit above where the market's trading now, 107.85. And the risk in my mind is about 112.50. So $5 risk. And I think I could get a $10 or $15 push over time in that stock to the downside. So we're opening about unchanged in the indexes, not a lot of excitement. Russell's a little higher. And again, I would probably use any sell-off to buy the IWM. But, it just seems like a very kind of cautious. We're going into summer now. And this was my thought, first 3 months, bat out of hell, right out of the gate. Indexes are up, I don't know, what's up, the S&P up 25% this year or something crazy. Can't continue. So I think that we could go sideways till the election. At some point, people are going to go to the sidelines until, we figure out where we're going next. And then, get a push in the latter half of the year again. So, don't like to do those kind of scenarios. But that's just basically what, I'm thinking here. So I'm going to leave you there unless you have any thoughts or Paul, you're welcome. We'll do a question and answer on Thursday this week. So if anything percolates, just submit your questions, and we'll have a Q&A on Thursday. Thanks, Eduardo. Thanks, Ofer. Thanks, everyone. Have a great trading day. I don't think anything's going to go nuts here. So plan your trades and take your trades, take your profits when they occur. Don't be afraid to peel money off the table. So those are kind of my summary thoughts for the day. All right, guys, have a great day. We'll see you soon.